Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Young, thank you for coming on today.
Happy to be here.
Well, we now see that Korea lost more jobs last month than it has in any month since 1999 in the aftermath of the Asian financial crisis. What's the significance of this, and what needs to be done in your view?
Okay, well, at least apparently the strange thing is unemployment rate did not rise by much. It only rose by 0.2 percentage point to 4.2%. But the employment rate, which is the number of people employed divided by the working population, it fell considerably by 1.4 percentage point to 59.4%. So and if we look at the economically active population, that provides an explanation. Economically active population fell by 550,000 people. So 550,000 people either were too discouraged to look for jobs, or they voluntarily went out of the labor market because perhaps they were scared of catching the coronavirus when they went to work. So we do have a very large amount of job losses. Some of that came voluntarily, some of it did not. We also have a very large number of people who are technically not unemployed, but they are temporarily on leave. In March, that number was 1.6 million, but in April, that number fell to 1.1 million, but it's still very, very high. It's next to last month's figures, it's at historically high. The industries that lost jobs, as it was mentioned in the previous story, were mostly service-related jobs, and that's probably going to continue until part of May. But I expect some recovery in these service industries because, well, we went from social distancing to everyday life warning about distancing. So there's going to be more economic activity in the service sector as the economy is a bit freed up. But now the problem is going to come from manufacturing and export industries because, well, we've seen that the April export numbers were terrible. It fell by 24.2%. So the focus of unemployment is going to start shifting to manufacturing and exports from now on. What can we do about this? Well, giving everybody some money was part of that solution, but we've seen in Europe that a lot of governments are subsidizing part of pay for companies, small and medium-sized companies. Korea is already doing this, but not necessarily for the people who are put out of jobs because of the coronavirus, but perhaps we could start expanding the program into that area. The more people who are unemployed now will make it more difficult to have a quick recovery in the future.
Right. Well, Professor Young, stocks on Wall Street overnight were down because of concerns over the tensions rising between the U.S. and China. The Nasdaq, in particular, down sharply for the first time in a while. What's the story in the global markets?
Okay, well, the U.S. market had a very bad week, Monday and Tuesday. The Dow fell by 1.89%. S&P fell by 2.05%. Nasdaq fell by 2.06% yesterday. And there's three big reasons. One is that the unemployment figures came out at the end of last week, and they're historically very high. The only time it was higher was during the 1930 to 1929 Great Depression. And then the U.S. Center for Disease Control gave testimony to U.S. Congress, and they contradict what President Trump has been saying. If they remove the lockdown and shutdown of the United States economy too early, you will see a increase in the coronavirus. So that is starting to worry a lot of investors. And then there's concern about Federal Reserve. They made some extraordinary moves to help the American economy deal with the coronavirus, but the market seems to want more and more. They may be getting too dependent on the money that's being put out by the Fed, and they're beginning to get a bit afraid that perhaps Fed is starting to run out of tools to give additional stimulus to the economy. But next, other than the United States, the other stock market seems to be in a bit of a holding pattern. China, the stock market was level this week. Hong Kong was dropping. Euro 50 was about level. FTSE went up. So other than the United States, the global market seems to be in sort of a holding pattern.
Right, and briefly, Professor, Korean stocks did manage to recover today, closing in higher territory. Tell us about the local markets.
Okay, well, KOSPI seems to be like the other global market. It seems to be in a holding pattern. Nasdaq, KOSDAQ, however, is doing amazingly well. KOSDAQ is outperforming Nasdaq of the United States. It's almost recovered to the level that we saw before the coronavirus hit in mid-February. So KOSDAQ is doing amazingly well. Part of the reason seems to be that Korean individual stock investors are buying not only KOSDAQ stocks, but also KOSPI bonds. But especially for KOSDAQ, the IT industry did actually fairly well during the first quarter because United States and Europe, during their lockdowns and shutdowns, they did buy a lot of IT equipment because they had to stay at home, do their work from home, and watch a lot of videos over their computers and such. And there might be some hope that the Korean biotech industry will pick up because, well, because of how Korea dealt with the coronavirus, the biotech industry seems to be doing very well. The testing kits for coronavirus seems to be doing very well. So there may be that hope, but it's been amazing how KOSDAQ is recovering from the shock that we had from the coronavirus.
Yes, indeed. All right, Professor Young, thanks so much for coming on and sharing your insights today. We appreciate it, as always.
Thank you.